Stefanutti Stocks was formed from the merger of Stefanutti and Bressan Stocks, Construction and Skelton and Plummer. The group operates across all sectors of the construction business and has recently also established a presence in Dubai. It has a market cap of 1.9 billion rand, a price to earnings ratio of 6.7 and a dividend yield of 2.4. Again, this is one that has received much attention, many news headlines, and I think some excitement around the stock. Janine, let's get your thoughts on it first.
I actually like Stefanutti Stocks. I think I've got two issues with them. The one is illiquidity, which is, if you look at the share price, that's why it's so depressed as well. And the other one is their exposure to building. Building has always been a very low margin business. You're not going to get anything higher than 4%, and 50% of revenues, give or take, comes from the building side. So in good times, it'll always bring it down, and in bad times, it's even more depressed. The rest of the business I quite like. The concrete structures business is the biggest in Southern Africa. They have good margins. They're busy setting up MEIP, mechanical engineering, instrumentation and power. That's really growing, and they're looking to take that into Africa as well, and power is a big spend. So
well, you can't argue with the power story in Africa. This one looks well diversified, Paul.
Yeah, I'm not sure who had that original expertise, whether it was Stocks or Stefanutti, but you're right, they were involved with the construction of power stations back in the 1980s, and they are a key player in the Medupi coal works, Groot Geluk, and also involved as a sort of overall project leader with Kusile, the second new power station down there in Middelburg. So, you know, a great group, and lots of pieces have been formed to bring together this company with only a 2.5 billion rand market cap.
What about their Dubai exposure, now setting up operations in Oman? Do you think that that is a positive for the group? Obviously, it was a negative some while back, and we saw the furore with Marion Roberts, one of the bigger construction stocks, in terms of their exposure to Dubai just before the financial crisis hit.
Well, it's not really Dubai, it's more Abu Dhabi, and the whole growth that's happening in Abu Dhabi, and with the World Cup coming 2020, and that is the whole the growth driver. So it's not so much the Dubai spend that they're targeting.
It's Abu Dhabi, and the money is certainly
and
in
that's
Abu
where the
Dhabi.
money is.
You're absolutely right. Paul, that's got to be a kicker down the line.
Yeah, you know, the problem with all of these stocks we're going to talk about tonight is the cyclicality of their earnings and the margins. I mean, as Janine says, 4% margin is regarded as good in the construction-related area. 4% margins is terrible. You know, MTN has a 60% profit margin in Nigeria. That's the kind of margins you need to have in order to be rewarded for your trouble. 4%
doesn't leave much room for error if you've got a 4% margin.
Yeah, you know, and so they insure themselves against fights and disasters to some extent with contract customers, but it's tough construction. And we have very good construction companies by global standards. It's just that it's not an easy business, and therefore, from my perspective, not one that I normally encourage clients to be in.
Again, you brought to the fore the liquidity issue with Stefanutti and Stocks. From a stock perspective, this is a volatile one. I mean, we really do go up and down, don't we? Or
on very low volumes.
On low volumes.
Yes.
That's going to be the trend set to continue. What can unlock here? What could unlock value for Stefanutti and Stocks? Is it just the cyclicality, a recovery in the broader environment?
My experience with crises, whether they're related to the fixed investment cycle or whatever, is that it never end. Nobody ever rings the bell and says, the crisis is over, now it's time to invest. What happens is that the old crisis sort of drifts out of people's consciousness to be replaced by some other thing. And, you know, you go through these phases, and it almost requires everybody to forget how much they lost, you know, to forget that Stefanutti once traded at 27 rand.
Well, of course, you're there to remind us. So it was at 27
So when it's finally
rand.
forgotten and people are getting used to the idea that it's now 10, 11, 12, 13, then that's fine. You can start accumulating them moving up. But for the moment, I don't see it, not immediately.
When we do see a change in momentum, does it follow that they will hit their previous highs? They'll go back to 27 rand on Stefanutti, and the stock that we've just discussed as well. Will we return to the previous high?
I think that there's definitely a shift in investor sentiment. I think where in 2007, where everybody just listed in it, there was this hype and you wanted to be in construction and you saw the World Cup happening. Anything that you could, in construction-wise, invest in was going to make something. And now I think they're picking. It's a very you have to stock pick the ones that are
Rather
actually
than
going to
just
make
buy
it.
across the sector.
Yes, exactly.
Stefanutti and Stocks, hot or not, Paul?
I've thought of a catalyst, and that'd be the South African 2014 national elections. Because if the ruling party comes forward with a new modern candidate for the presidency that's seen as someone who's going to get things cracking, then maybe then that could prompt some kind of excitement. Because it's that PE, generalized sector reflation, that's going to make you money in this environment.
Well, thank you for coming up with the catalyst. Hot or not on Stefanutti or Stocks?
Not hot, unfortunately.
Janine, hot or not?
I'm hot on Stefanutti. I think it's one of the medium-sized counters that's actually got quality businesses included, and you can actually see that they have been performing consistently over the listing period.